This is about Wall Street bets versus wealthy investors and hedge funds, simply explained, because it can be a complex issue. If you're not a stock trader, you're an average investor, or not an investor at all, and just curious about what all the crazy news about this is about. So if you're a regular person trying to figure out what's going on with a group called Wall Street Bets and hedge funds and some billionaires, then this is for you.
I have to disclose, I'm not offering financial advice of any sort, and I highly recommend you do your own due diligence before you invest any money in the stock market, because you could lose everything. I'll start by summarizing what happened. Basically, a company called GameStop, which owns a bunch of physical stores, was having some financial issues. Their sales were on the decline, and they were having some of the same issues that families and other companies have been having during this COVID crisis.
I'll try to keep this video about Wall Street bets versus wealthy investors and hedge funds simply explained as simple as I can. Typically, if a company isn't showing a profit or has issues that show it might not be stable, the stock price will go down. If it has good news or is making a good profit, it will help the stock price to go up. Sometimes there is good news, but people just haven't heard about it yet because news organizations haven't reported it or have other things to talk about or whatever. But the good news isn't widely known. And I want to let you know that this can also be true for bad news. If you like this video, make sure you give it a like. Thanks. There are also several different ways to make money in the stock market. A hedge fund or investor can buy stock and make money as the stock price goes up and lose money if the stock price goes down. But again, there are different ways to make money in the stock market. But I want to focus on the recent Wall Street bets versus wealthy investors and hedge funds as it specifically relates to GameStop in this current battle, and I want to keep it simple. I said there were several different ways to make money. Some hedge funds and wealthy investors were attempting to make money when GameStop stock price was going down. Now this is legal and something that's done by the big boys and other investors. And it's a bit of a gamble, where an investor has research or analysis that they think means the stock will go down, so they make money. However, if the price goes up, they lose money, and they can lose big. That's all you really need to know about this for this video. This is where it gets fun or interesting. A lot of stock purchasers and sellers use charts that show a stock's price and other information that tells investors like Wall Street Bets, wealthy investors, and hedge funds the types of bids or orders that investors are making for a stock. A group on Reddit or subreddit called Wall Street Bets noticed that GameStop basically had a ton of short sell orders from hedge funds. So Wall Street Bets decided to basically have some fun and take on the wealthy hedge funds by calling on small investors to invest in GameStop to make the price go up, which would in effect make the hedge funds lose money.
Now, GameStop did have some good news recently, and I want to keep this simple. But a billionaire businessman, or the man who founded Chewy, that is a company that sells products for pets, bought a bunch of shares of GameStop and has a plan in place to help the company out. But that's a really simple version of this. The point is, GameStop had some good news that hadn't been widely reported.
Small investors not only came, they came en masse to have some fun, to take on the wealthy hedge funds, and they plowed money into GameStop, causing the stock to rise. And this caused the wealthy funds to lose big money. But the hedge funds didn't just lay down. They tried to short again, thinking they would wait the little people and Wall Street Bets out and recoup their losses. They expected the small investors would lose interest, basically, so the hedge funds tried to sell short again. But Wall Street Bets and the small investors pushed the price of GameStop even higher by not selling their stock and buying more. This caused more losses by billionaire hedge funds, and the hedge funds had to pay out of pocket and borrow money to pay what they lost when the stock went up again. I want to point out that hedge funds have other investors or regular people who invest with them for retirement and traditional investing purposes. So while you do have some individual billionaire investors that do this type of thing, not all hedge funds are made up of billionaires. What is unusual here is that the people running hedge funds and many other wealthy investors are used to playing by certain rules that they feel only they get to use. The Wall Street Bets crowd in this case turned the tables and spanked the big boys, or they rocked those used to making the rules and thinking that they have a special place when it comes to the stock market. The small investors that went along with Wall Street Bets got to have some fun, make some money while causing some of the hedge funds to lose money and suffer embarrassment. They are also very upset. This has started to snowball into some trading platforms like Robinhood, who halted trading and started just selling out some of their investors' stocks, at least according to some investors, and they caused some big investors to take sides. And some are saying that if the big firms can do this, so can the small investors. What is fair for one is fair for others. And they're attempting to use political power in publicly condemning WallstreetBets and small investors that were involved in the battle over GameStop. Now it seems to be spilling into other companies in other markets, so there will be more to come.
I hope this Wall Street's Bets versus wealthy investors and hedge funds, simply explained, helped clarify the very basics about this from what I've seen and understand. Please make sure you subscribe so you can come back for more.